Alrighty, traders. Good afternoon, good morning, good evening, and welcome to the showdown. It looks like it's not going to be a showdown today because Cameron is actually not available. I don't know if any one of you know, but Cameron actually had his second child, a baby girl, Mila, that came last week Friday. So Cameron is actually very occupied this morning. I told him to go ahead and get the heck out of Dodge, and I'll go ahead and take over the show this morning. So hopefully everyone is doing fantastic this morning, and we're ready to rock and roll. We're going to go ahead and look at some trade opportunities, and we're not going to go ahead and spin the wheel because I'll be doing everything today. But we are going to go talk about the Euro US dollar. We are still in the Euro US dollar from our last show. We'll talk about that, and we'll talk about the market's movement. So let's go ahead and jump straight into that this morning as we dig into some trade opportunities. Now, Brian, good morning to you. Jack, good morning to you. He says, let the party started. This party is going to be only a one-man show, so this is the only party that we're going to be invited to, and that is it is a one-man show today. So we'll go ahead and get this party started, even though it is a one-man show. All right, so let's go ahead and take a look right here as we dig into the markets this morning. I'm going to go ahead and share my screen. And let's go take a look and see what is going on this morning. Trading opportunities right here. All right, there we go. So let's go take a look here as I monitor this pair. And this is the Euro US dollar right here. And I'm going to go to the daily time frame. And if we look over here at the top right here, we're certainly looking for price to move back down and chase after this low right here at this point. 1.0762 is the downside target. That's the target we're looking for. We see a little bit of slowdown right here. If I go ahead and pull in some oscillators right here, we can also see that we have a beautiful divergence sitting up right here. Price and momentum is absolutely in line right here as we see price moving up and the oscillator moving down. So we do have the divergence set up right here. A new high was formed over here as well. So this is a new high. The low that it's actually targeting in order for us to go into a downward trend, at least a short-term downward trend, would be this low right here. This is the low that we'll be looking for price to go ahead and take out. That low is priced at 1.0471. So there is absolutely a room for the market to move down. If we're going to say that the market is remaining bullish, then we could probably go ahead and add in. Let me go ahead and add in another indicator right here. I'm just going to go ahead and add in the EMA. And I'm going to go ahead and create a 200 EMA here. So let's turn this EMA into a 200 right here. And just so we can see the overall trend, let me go get the color change here. And make that purple. I'm going to thicken up the line a little bit. Perfect. All right, here we go. So we can see that there is a 200 EMA sitting around about 488. So price is absolutely, here on the daily time frame, price is bullish. We're starting to see a little bit of bearishness coming right here, indicating that price is we might see the momentum pushing down lower. If I go down to a 1 hour time frame, you can see that right here, based on the daily being bullish, you can see that we're also bullish here on the 1 hour. And it's fighting with this this support trend line right here. Let's call it automated trend line right here, which is the 200 EMA. It's really battling to go ahead and break through that level right there. And so as we try to break through that level right here, eventually when we do break through that, we will then go ahead and look for reversals. But this is the thing. If I look at the chart right here on this pair, and just by the way, the position that we're currently in is bearish on the Euro US dollar. So we are bearish and we're looking for a target. Actually, our target is not too far down. It's around about 8,200. No, so not 8,200, sorry, 800. So 1.0, 800. That is our target right here. So we're looking for about a 70 pip drop. And we were on our way. I mean, it got down to around about 40 years. So bounce back up again. But let's go down. Let's go ahead and break this down right here. I want to I want to look at this this chart, and I want to see. Okay, see that low right here? Actually, it's this low right here. So there's a low, there's a low, there's a low. We see a high up here at the top. We see a new high up here, and we see another high up here. Now, traders, we have not confirmed oh, hang on, no, we have. We have that red candle right here. That red candle there actually confirmed the break of that low right here. So that means we're starting to see lower highs, and we've broken a low. Therefore, we should see the market continue to work its way back down south. So I'm actually still good on holding our bearish sell on the euro US dollar. It's just going to take some time. Let me go down to the 15 right here. 15 minutes is already bearish. And if I look over here on the 50 minutes, and I'll go ahead and use these swings right here as a confirmation of market direction. Here's the target to the downside, and you can see right here 1.0801. Perfect. That is perfect, exactly where we would want to go ahead and look to take profit. Clearly, this low right here that we're at there, at around about what's that, 850. That low needs to be broken in order for it to get down to this target. So we'll be watching the level at 850. And a break of 850 will get us down to this level at 800. All right. And based on what I saw on the 1 hour time frame, and as well as the daily time frame, I would be suspecting that the downside move is absolutely due. Okay, it's imminent, it's due. The market's reaction doing what it needs to do, but that's okay. We should see the market continue. Now, with that issue, it's not the issue, with that support there, I'd like to take a look at the dollar index and get a quick look at, do we anticipate bullish movement in the dollar? Here, I'm going to go to the daily time frame first and take a look at price action. And right here at the 1.27, I think we've spoken about this a couple of times. I see an inside structure right here. And with this inside structure, I do see, and let me go ahead and mark it off. Here's the inside structure right here. 1, 2 right here. 3 is down here. There's 4. Markets come down to number 5. So this is wave 5. So with that being said, we have a complete 5-wave structure. We're looking for price to move up to this level. So yes, dollar is expected to have a midterm, short-term, call it what you want to, rally towards this level right here, which means, traders, that we should be expecting euro US dollar to sell off and US dollar CAD to actually go bullish. Now, if that's the case, let's go see if we can find an opportunity on US dollar CAD. I know it hasn't been moving that fast, but maybe we do right here. So let me go ahead and do some housekeeping. In fact, before I do that, let me see here. What do I have here on the chart? Okay, you know what I'm going to do on the US dollar CAD right here? I'm going to clean up house here. And I'm going to delete all the drawings here. I'm going to go down, because I'm focusing on what the dollar index is telling me. I'm going to go already down to a 1 hour, maybe even 15 right here. And I'm going to look to see where I can find an opportunity here. So here is, if I look at the 1 hour here, I do see a downswing. Oopsie, what was that? Okay, let's delete that sucker. I see a downswing from here to here. If I go ahead and look at my trend lines, we did breach that trend line going down. So there is no doubt that we can see that the trend is down. But if I look at the bigger picture, this is what I'm seeing, the bigger picture. I'm seeing price doing this. And we did come off a 618 bounce right here. And so if I look at the larger time frame, or if I look at the dollar index, and dollar index is expecting to rally, then that means that we're probably going to be chasing after the high right here and probably go towards this area right here. Okay, if that's the case, let me see if I can find reversals down here. Let me find a reason why price should move back up again. If I don't, I simply have to stand aside. Okay, so if I look over here, if Cameron was here, you would certainly be looking at this as beautiful level right here. Look at this this range right here. I'd like to see the market break above 133.46, but that gives us only well, that gives us exactly 20 pips right here from where price is right now. So if the market is going to come back to retest that top, man, this is a tough one. The trend is down right now. We haven't seen a reversal. So although we're expecting a reversal, we're expecting price to move up. We're not seeing the signs here on the 1 hour because everything's still pushing bearish right here. You know, because Cameron's not here, that gives me the opportunity maybe to hold off on a trade and not place a trade because I'm not competing. I'm not trying to chase on a trade too quickly here. And oh, hang on, it's down here. Oh yeah, hang on, wait a minute. We're at support here. All right, we're at support here, and being at support. Now this is, don't do this at home, all right, and be very careful if you're going to go ahead and make a decision to follow this trade, all right, because some of you might not be as an aggressive trader as I am. We are at support right here. My philosophy is this, and I know we're in a downward trend, so you're expecting support to break. But if we're in consolidation, we're at support. I buy at support. I sell at resistance. I use cost average to be able to cost average in my position right here. So again, if you are not comfortable with this trading against the trend, do not do this. Okay, and I'm going to go ahead and do this right here. I'm going to go ahead and go to dollar right here, dollar, and I'm going to buy. There it is there. Let's see if I got a good price. Looks like I got 33.17. Now I'm happy with 33.17, and the reason why I'm happy with 33.17 is because of this. And by the way, traders, if you're following my Telegram channel, check out down below. If you're not following, check out down below. Inside the description here in YouTube, we've got the Telegram channel. Click on that Telegram channel, and you will be able to follow the signals that we're doing currently right now in the show. So follow the signals. Now I am buying at the support. Now let me explain to you something that I'm comfortable with. If the market does break through the support, then I've already looked at it visually here, and I've seen that here's a wave 1. Here is a wave 2. Hold on, why is it not locking? Here's a wave 2 right here. And then down here is a wave 3. So which means, traders, if we break through the support, then there's a chance that we're going to go down to 132.74. 74. Now, if I bought in at 17, that means that price has to go. If price goes down another 25 pips, I'm probably going to be buying again. And so that means if this support is broken, bought here at support, I'll probably be buying in again right about there. I'll be buying in right about here again. So which means that, traders, when the market drops back, it'll pick up both of these positions. When it comes up to just past halfway right here, we're going to cash out with profit, which means that if it comes back to retest that breakout point, we're going to make profit. That's the one side if support is broken. Of course, if support holds, we're rallying up, we're going to make a 20 pip profit, we're going to get the heck out of Dodge. So it's going to come back down to, does the support hold? If it does, it should go back up here, and we should make up profit right here. If it doesn't, price is going to drop down to about 133.75. At that point, we're going to turn around, and we're going to head back up north, at least get a corrective move to retest the breakout point. Maybe it doesn't come right up to the breakout point, but it's going to go back to retest the breakout point, and that's where we're going to make money on that again. Again, if you're not comfortable with aggressive trading, if you're not comfortable with trading against the trend, then simply do not do that. All right. And this is the reason why traders, when I look at the overall direction, most important, I look at the overall direction, define what the trend looks like. And if I understand that the trend is down, but I'm at support level, I then look and see, all right, if I'm wrong and I'm trading this correction, how far can the market move back down south? And if the market's going to move down south, where are the levels where the market can turn again and come back to retest the point that I actually traded at initially? Those are the important things when you're trading against a trend. You've got to understand where you're in the where are you in the marketplace and how far the market can move back down south. Now, a simple thing would be for most traders to say, hey, I'm going to sell when the market breaks through that support level and stay with the trend, or wait for the market to go ahead and rally up and then go ahead and trade at resistance and sell it at that point as well. So that would be more of a trend-based sort of approach, and traders would be more conservative. They would go ahead and look at something like that. Following the trend is always a good way to approach the market. All right, now let's go ahead and take a look at, so just as an example right here, let's go to, all right, so here we go. All right, so we entered there, we're down 16. So the next level I'll be entering in is 10 pips from where it's trading right now, around about 32.95. I'll enter again around about 32.95. I believe I've set it to 25 pips. Let me take a look over here. 25 pips. Yep, 25 pips. So and let me see if I've got my profit target set at 20. Yep, I got it set at 20. So I'm good to go. When it hits that 20 pip profit, I'm going to be out of the market right here. You can see my profit target is sitting over here at the top, waiting to be picked up. Now, if that's the case, if we're starting to see some bearishness in the dollar, let me go take a look at the euro right now. Let's take a quick squiz at the euro. And yeah, would be a case of, hey, listen here, this is the 15-minute time frame. The 1 hour's fighting with this level right here, but we've had this pullback. So let's go back to the 15 right there. So the market could go back up to this point right here. So yeah, I have my first downward swing. Do I see a breakout? Let me see here. So the market really broke through that support. We're on a 50-minute downswing. I see that there could be a little bit of a rally here. Let's just see how much the market can move back up again. And if I go from here to here, price can move up another 25 pips to retest that level, which means that, again, if price moves into a range, then getting in at this point will allow me to get in. Now, I could wait a little bit and wait for price to get up here, or I can simply go ahead and trade it over here, and if price goes up to this point and then comes back down to my first entry point, I'm going to be picking up 20 pips, and I should be good. If I sell here, then that means I give the market a chance to even go down and not go to resistance and make 20 pips right here. So traders, I'm going to go ahead, because I've already analyzed the euro US dollar from a daily perspective. I'm looking for euro US dollar to go short. I'm going to go ahead and sell euro US dollar. I'm banking on dollar index getting stronger. So here we go. Oh, hang on, my bad. I'm already in on the euro US dollar sell. So I guess I'm not doing anything right now. All right, I'll let that one go. All right, so we are already in the euro US dollar, but if I was not, I would be selling euro US dollar right now with the opportunity to sell again if it goes up to that resistance level. Let's go to the next currency pair, Aussie. This is Aussie CAD. All right, so we're looking at Aussie CAD at the moment right now. As we look at Aussie CAD right here, let's go ahead and take a look at what we have. Just say it out. Say it the way you see it. All right, speak it out loud. Say the way you see it. And right now, I'm seeing consolidation, but I do see this big downside move first here. Let me do some housekeeping here. Let's do some housekeeping on this. All right, there we go. So trend is up on the 4 hour right here. Trend is up on the daily. So here's the daily. Trend is up, but something we notice here on the trend is, yeah, we have a wave one. Here we have a wave wave 3 right here. And notice how the market's come all the way up to the 1.27 right here. So what am I expecting? I'm expecting price now to chase after this low right here. So I'm looking for price to chase after this low. Let's just change that line a little bit into dash line. So I'm looking for price to chase after 90.41, and it's right there by that 200 EMA. So actually, I'm going to believe that we're going to see a bearish move in Aussie CAD. Therefore, I'm going to go down to the lower time frame. I'm going to see where I am with inside some market cycles. And okay, perfect. Check this out. Actually, you might see a bit on the 15. All right, so maybe not so well on the 15. Okay, so you can see it. Here it is. If I look over here at the inside structure, I see here that there's a wave 1. Now remember, this is also counter trading because the trend is still up on the 1 hour. So I'm trading it back to the 200 and back to a price point that I believe the market's going to get to. Yeah. So 94.37 in the short term, 94.37 is where price is going to go to. Now here is consolidation. We're definitely seeing price moving inside consolidation. And so I have to acknowledge that. And so what I'm going to do is I'm going to measure out the distance of consolidation right here from where price is at. So where price is at, how much further can we go up? 19. Oh, so it's stuck in about a 32 pip range. A breakout from where we are right now, do I have potential to make 20 pips? Yes. So if the market goes back up again, I should be able to get back in on this trade, and I should be able to hit my target down here at with about 33 pips. So I'm going to go ahead and sell. And again, traders, the best thing for me to do is wait for it to get to resistance and then sell it. But because I'm convinced that this is the day that the market's going to break through that support, based on what I'm seeing on the larger time frames, I'm going to go ahead and chance it. And I've got nothing really to lose because if it goes up, I'm just going to enter the game. And if it stays in the range, we'll make profit. All right, we will make profit if it stays in the range. So I'm okay with that. And so here is the Aussie, and I'm going to go ahead and sell Aussie. Aussie CAD. Now that brings me to the New Zealand CAD. I know there's some questions on the New Zealand CAD. Well, let's go ahead and take a look at some New Zealand CAD positions right here. Okay, New Zealand CAD. If I look at the larger time frame on the New Zealand CAD, and let's do, I'm going to do some housekeeping on this one as well. All right, let's do that. All right. Now, if I look at the New Zealand CAD, I'm seeing that on the daily time frame, we're definitely up. Trend is up on the daily time frame. But the market's setting up with a nice little irregular flat right here. I've been talking about it in my trading rooms. Here's the irregular flat pattern right here that's setting up right there. There it is there. And the market has not broken the structure, which means that this is going to be our AB boundary or our swing low, swing high, that we're looking for price to continue to work its way back down to at least come back to retest the 200, which is at 83.15. All right. Let's not even worry about Fibonacci levels, right? Let's just pay attention to what the market's showing us right here, just on this. So this tells me that we could see price going down to, based on this fib now, based on this fib is around about 82.36, right about there. Okay, so 82.36. Now, that means I'm going to be bearish on New Zealand CAD. I should go down to the low time frame, look for bearish opportunities. Here is the turnaround point right here. And so therefore, I'm not going to even use the swing. I'm just going to take what I see right here. And I see consolidation right there. Now, traders, if I had more time, I would say, let me wait for the breakout, all right? Let me rather wait for the breakout and then trade the retracement right here and then sell at the top going down, because the market has been holding at this point pretty solid. But what I'm going to do is I'm going to cost average on this. So which means that if I cost average on this, if I get in right now with prices at 82.40, 86.42. If price is over here, if I trade it, if it trades back up again to, let's say, 87, right here at the top, then that means I would have to go in with there will be a 60 pip retracement. So we've got about a 60 pip range right here. Okay. Now, it's not advisable to sell at resistance. Sell at support. It's always better to go ahead and sell at resistance, right? So going in and selling right here is pretty risky, all right, and not ideal. So what I'm going to do is I'm going to go down to a 15-minute time frame. And I'm going to look at this swing that we have right here. And yes, there is this chance that the price is going to come back up to take out that high. But I'm going to bank on the breakout happening today. I don't see enough momentum behind this to break it. So which means that if it does go up higher, I might have to get in at least another 2 times on this, which I'm prepared to do. But price can go down to this level right here. And so what I'm going to do is, traders, this price is at 85, 85.85. Oh, nice. I like that number. 85.85. So what I'm going to do is, if I sell now, I'm going to make it worth my while. I'm going to sell now, but I'm going to chase after actually not just 20 pips in the market. I'm going to make it worth my while. If I'm selling at resistance, I'm taking on some selling at support, I'm taking on some risk. If the market's going to go up, I'm going to chase after 85.85. Now that is around about from where price is trading right now. That's 40 plus another 15. That works out to 55 pips. Let's go for 50 pips. I'm going to chase after a net 50 pips on this trade, which means if it's just a single entry point, I'm going to make my 50 pips. But if I get multiple, I will still get out at a 50 pips. Now, I will change it if the market does not break out of this range. But for right now, I'm going to go ahead and sell New Zealand CAD. Yes, I know it's at resistance. I'm doing it because we don't have a lot of time on this. And I'm going to go ahead and say that let's go ahead and grab 50 pips on this trade. And I'm getting in at a good price at the moment right now. So I'm going to go ahead and sell it right here. Oh, it's already dropped a little bit. Looks like, as long as I'm getting 35, yep. As long as I'm getting above 35. So there, I got 35. Okay. So I'm selling New Zealand CAD right here. But I'm going to be chasing after this target down here. Actually, now that I've got in at 35, 50 pips will get me at 85.85 right here. So I'm chasing after 85.85. So I'm going to be anxiously waiting to see if we can break through this level right here. And if we break through the support level, which is around about where price is at right now, probably at 86.30, then 85.85 should be a no-brainer, and we should be able to get to that pretty quickly. Now, the reason why I'm pretty confident about going down to that level is because I'm already in multiple positions on the New Zealand CAD, and we're actually chasing after 8,400. So 85.85 is still pretty far away from where we're actually looking to go ahead and chase after. So let's just see if we can get that breakout. Now, another thing that's important as well is if you actually go to the daily time frame on this one right here, and I've really, trust me, I've analyzed this pair, to death. And if you look over here, just hold on a sec. If you look over here on this daily time frame, there is a level that is key right here that we break below. And this is this one right here at about 8,600. There it is there. That's the level that's important. So so as we get to 8,600, I know 85.85 is a targeted downside, but trust me, if we stall at 80, if we stall at 85 at 8,600 and it doesn't look like it's going to break through 8,600, maybe I'll go ahead and just cash out and say, hey, let's just take a profit for the day and close out. So that level is going to be tested. If we, although 86.30 is a short-term support level, 8,600 is a key level of support. That if we break through that, then 85 is not going to be a problem, and we're chasing after this low right here. That's going to be around about 84.58, and then on its way to 80. This right here, 82.42. So trust me when I tell you that this support level, or this bit of support that we're getting on the 15-minute time frame or the 1 hour time frame, is just light compared to the 86 level. 86 level is the price that we have to break through, and that's really going to be key today. If we can break below that and close out below 8,600 today, then I'm going to be feeling real confident heading into next week as we look for price to move down further down south. So we'll see how that plays out. All right. Yes, John, we've been in the New Zealand CAD since November. Yes, you're not the only one, pal. You're not the only one. Okay. All right. Let me go ahead and get my camera back on here. Sorry, I'm a one-man operation today, so I've got to do camera work. I've got to do all the stuff today. All right, let's go ahead and take a look at what else we have left. I think we've got the CAD Swiss. Cat Swiss, listen, I just love the way the Cat Swiss is going right now. I think buying the Cat Swiss right now anywhere would make us profit. Just kidding, just kidding. All right, so Cat Swiss is really moving up nicely. I like the way Cat Swiss is moving up. Let's go to the 1 hour time frame. We're at resistance right here. Oh man, are we gonna get? That's the problem. Why am I always getting into? Why do we always have? We're gonna have to look at the times again with our show, because every time we start our show and we look at the markets, we're always at resistance or we're always at support that we're trying to wait for a breakout or trade at that level. So, and although the market's trending up right here, we're at resistance right here. So this is the thing. When I'm at resistance right here, I should wait for resistance to break out. But if I'm convinced enough that the market's going to go north, then clearly I have to go ahead and trade it, buy it, and just keep trust that we're going to get a breakout of that level. Just for education purpose, because this session's all about education, right? It's not about telling you what to do. We're not telling you that you have to do what we're doing. We're just sharing some information about how we trade and how we look at the markets and how we break the markets down. So it's for educational purpose. Now, for educational purpose, let me go ahead and make sure that this is a disclaimer right here. Very, very important, traders. If you want to go ahead and trade the markets, your first prize or the first priority that you should have is try to follow the trend. Try to follow the trend. Trading counter and trading against the trend may not be everyone's cup of tea, but not just that, it does make it a little bit more harder to make money when you're trading against the trend, because you have to be really really focusing on the strategy that you're using that can be counter but also can be profitable as well. So be very sure that if you're if you're trading against the trend, that you have a strategy that is going to be optimal for those conditions that you're trading. If it's not, it might run you into problems. All right. So if I look at the CAD Swiss right here, I do want to trade that breakout. Why am I anxious to go ahead and buy it? But at the same time, I want to sell it. All right, so let me see here. Let me do some housekeeping on this. Let me do some housekeeping. Okay, so here I see an inside structure, wave one. Oh, price moves way down. All right, so what if I did this? We'll focus on that structure. Wave one. Wave three. All right, so the daily absolutely tells us that we're going to see price moving up. Let's go see what our oscillators are doing. We're not quite in the overbought condition yet. Let's take a look at the 4 hour. 4 hours breaking through that trend. We are getting into an overbought condition though. But that doesn't mean anything. The market could still move 100 pips even though it's through there. There's a low being formed right here. All right, I'll tell you what I'm going to do. This is how I'm going to play it. Everything on my large time frame. I am seeing a bit of divergence here as well. So there's a good chance the price is going to drop back down first before it goes in rallies. Let's take a look over here. I'm going to see here. We've got about 45 pips before that area finds support. I see divergence here, and I see a low that needs to be formed right here. So we created highs. We've got divergence. It's looking for a low. I'm going to sell. I'm going to do a counter move. Although I'm anticipating CAD Swiss to continue to rally, I'm going to trade a counter move for the day. Counter move for the day. And I'm looking to see if I can trade this counter move going south right here before the market goes long. Now this, hang on. This could also be, snap. This could also be a leading diagonal that could actually, if you look at and study leading diagonals actually is a wave one structure that chases after the third wave pretty quickly. So it creates a very shallow two wave, and then it goes to the third wave, normally goes past the 1.618. So this is a leading indicator. So you know what, I'm going to stay with the trend that I'm at with. I'm going to go ahead and buy. And if it means I go in with a second order a little later down the line, then so be it. Then I go in with a second order. So I'm going to go long on this one right here, and I'm going to trust what I'm seeing right here in the larger time frame. There it is. I'm long. Yes, traders, I know. You're looking at it, you're going, are you kidding me, Gary? You're going long at resistance. Yes, I am. And I'm going long at resistance because I'm seeing that leading diagonal right here. And yes, my rule is sell at resistance, buy at support. But when I see a pattern like this, then I'm going to go ahead and suspect that that's going to give us that breakout that we're looking for, and the market's going to continue. Now, I could do this. I could wait and say, hey, let me rather be safe and wait for the breakout or wait for the correction and trade buy long here, or trade the breakout and then trade the buy once we get that retest. That would be a better option. That would be a more conservative option right there, okay? Or trading against the trend, obviously that's aggressive. So traders might stay out of the market if they want to go ahead and look to sell. They'll say, no, I don't want to sell. It's against trend. Let's rather not do that. So that's an option right here, not to go ahead and trade counter moves, but rather to wait for a support bounce and then go ahead and trade it. Now, the way I'm trading right now is this. If the market chooses to actually go ahead and not break and pull back, I will be re-entering, which means I'm entering multiple entry points. Traders, if you trade with multiple entry points, you absolutely have to make sure that your equity management is ideal. Listen here, there's no difference between a person that goes ahead and let's say they've got a $10,000 trading account, right? Got a $10,000 trading account. There's no difference of a person that goes and says, hey, I want to go ahead and only place a percentage of my risk. And let's say their lot size is around about 1.20 right here. If they go ahead and put in 20 microlots here on the pullback right here, and they look to trade this as a swing trade going long, and they enter with 20 lots, there's no difference between a person that does that or a person that decides to go ahead and do something like this, where they say, instead of going with 20 microlots, I'm going to go ahead and put in, let's say, 0.02 lot size right here. If the market goes low, and I put 0.02 right here, 0.02 right here, and enter multiple entry points, but break that lot size that initially we're going to enter, break it down into multiple entry points, but reducing your risk so that you don't expose yourself. You can still go ahead and say, hey, you know what, if the market goes through here, I'm going to go ahead and cut my losses and risk only that 1% that you've broken down into multiple trades. So you can still place stop losses and do all of that stuff, manage your risk accordingly, but put in multiple entry points. You will find yourself more successful with this type of strategy than a person that's trying to get in with one entry point with max with this. When I say max lots, meaning the lot sizes that they've allocated based on the risk percentage that they're willing to take on their trading account. So, and I'll tell you why. Because how many times have you gone ahead and waited for the market to go ahead and pull back to get in on a trade, and it's coming close, and you go, all right, this is where I want to enter, and the market turns around and goes up, and you miss out your trade? I had it on the Euro US dollar, no, Euro JPY. We just had it in my trading room on the Euro US dollar. We looked at entering, Euro JPY. We looked at enter. The market missed our entry point. We put a pending order there. Market missed our entry point by 5 pips, and it's gone ahead and rallied 400 pips. So those are the type of things that you go, man, if I just said I'm going to put in a little here, a little there, I could have got in with something and made some money to the upside. So going ahead and saying, hey, listen, I'm going to throw something at the market. I trust the overall direction. I understand where I am in the market cycles. And that, by the way, traders, is vitally important. You've got to trust where you are inside the market cycle. And if you believe that and you trust where you are in the market cycle and you trust the direction, then it really doesn't matter where you enter, all right? But it does matter how you enter, all right? Because if I went ahead and I just said, I'm going to load everything in here, I'm going to go with the 20 microlots right here at the top, and then the market goes back and I don't have any more to go ahead and enter down here, then I'm really just exposing myself for a long wait before I start seeing some profits, all right? So again, it doesn't matter where you enter, but it does matter how you enter, all right? Very important. It does matter how you enter. All right, as long as you got the overall direction, you should be good to go. All right, traders, looks like it is trying to break through that resistance. So kudos on me. And let's go ahead and take a look and do a sum up of what we have currently right now. So we are in on the euro US dollar. We're still in on that positions. Again, if you go down below in the Telegram channel and check out the Telegram channel, in the Telegram channel, you can follow these trades so you can see where we get in and out. This is a live account. This is the real McCoy. This is no jokes. We're not playing demo account here. We're putting real money on the line. We're just going ahead and showing you this stuff from an educational point of view, but we're also putting money on the line so that it's real. All right. So this is not just like play, and I'm just making up stuff. Now we have gone long on the we've gone long on the US dollar CAD. We're currently at break even, about 2 or 3 pips down. We've gone short on the New Zealand CAD. We're around about 1 pip break even. We're about 1 pip in the profit. And then on the CAD Swiss, we're 6 pips up on the CAD Swiss. Are you kidding me? No, I'm not. We're 6 pips on the CAD Swiss. All right. Then we've got the Aussie CAD. We're break even on the Aussie CAD at the moment right now. And I think that's it. Yep. So that's our positions at the moment right now. Let's wait and see. All right. Let's wait and see how things play out. And by the way, if you follow us on the Telegram channel, check it out. All the signals will be coming through. All the trade ideas will be coming through. You can go ahead and check it out. We want to be transparent as much as we possibly can. We want to show you exactly what we're doing, how we're doing, how we're entering, so you can see all of that stuff right there. Now, traders, if you're interested in getting involved into a trading group, make sure you check out Traders Network Club. Traders Network Club. Cameron actually runs his own trading room. Check it out. He's doing some great stuff there. The traders are making good money. They have good communication between the traders. It's an open forum in the Discord. Really cool. Check out the Startup Pro membership. If you're looking for some trade ideas, check out the professional membership. If you're looking for some trade ideas, if you want to go ahead and follow our trades. I want to give you some updates here quickly before we go ahead and close off here on results. Here we go. So if you take a look over here, it's been a slow start for the month of January. We're on 6% up, but I'm going to tell you this. We did have additional funds being added to the trading account. So, and it was 100% of what we normally do, which means that normally our percentage would be around about 12%. This month is only 6%. December was the same thing. If we look over here in December was also 6%. Again, we funded a lot more money because we rode some trades out, specifically New Zealand CAD. But we've been having a pretty solid year last year. Last year, we closed out with plenty of profit. And this year, in fact, if I go over here, I take 6% off. Take a look over here. Where is it? Percent. There it is. Take 6% off that. And you're looking at 500, and you're talking about compound interest. 547, call it 48. So 548% return last year based on compounded interest. All right, based on compounded interest. If you want to work out what the monthly returns were on a month to month, there it is right here. Without compounded interest, this will be the month to month returns right here. So you can go ahead and calculate that out, and you can see right here it was well over. If you take all of this right here, averaging around about let's say 15%. I'm just going to be conservative, say 15%. You times that by that's 30. You're looking at 180%, and that's 180%. Give or take a few. 180%. That is non-compounded. That means profits being taken out each and every month. You're making profits on your original balance. So if you start off with a $10,000 trading account, you made 180% on the $10,000 over that period. All right, pretty good results. Pretty good. Cameron's doing pretty solid in his trading room right here. Look how the last year, this was last year. He really picked it up in May. Really doing well in May. This month, a little slow this month, as I am also having a slow month as well. 3% this month. But you can see right here, he had a very solid year last year. 2021, also a very solid year with one downside turn. But he's been very consistent across the board. Traders, check out Traders Network Club. Check out Traders Network Club. You get all the tools, all the information that you need in order to be able to be successful. All right. There we go. All right. Thank you. Appreciate it. Let me see here. You're welcome. Welcome there, Ben. All right. Good job. Perfect. All right, I think we've got pretty much all the other questions that were answered right here. All right, traders. Well, that pretty much wraps up the Friday. I've got to jump into another class that I'm late for. So with that being said, traders, happy trading, and I'll see you next time.